Good morning, all you cool cats out there. This is the Breakfast Club. My name's Darren Hancock. I'm your host today. We're looking at the oil, a little bit of gold, S&P 500, and maybe tech today. We'll go through all of them, GBP and all that, and see where things are going. Remember, this is non-farm payroll week. Keep her light. Be out by tomorrow or Thursday morning, the latest. We're looking for a change or a break in structure today on something, anything to get ourselves a little piece of the action. So let's start over here with GBP. How's that? Start with the British pound on the daily. This is the British pound on the daily. We're still looking for downside here. We may get a pull back into this order block here or the bottom of this candle here. We want this to kind of remain open, and tomorrow perhaps come back into a pull back here into the lower, this old low back here, or this previous fair value gaps low. That creates an inversion fair value gap, and then we'll start pushing down for lower prices down in down around 119, 120, that range. Yeah, so kind of keep your eye on that for today. We might get a run back up into here or this low today. So look for a possible reversal pattern set up for today. Yeah, I'm thinking this could be just, I'd like to see this kind of stay open, create that little gap, and then tomorrow run back up into here to get short. That'll be your last day, because that'll be Wednesday, to get something off down in here. We'll see how this one kind of plays out today. So for hourly, I want to see a break above this order block here, this breaker. If we get above here, so we're already through 1, 2, 3. So this gives me more of a positive upside. I'd like to see it get above here, get above this create an inversion fair value gap here, so we'll get a body above, a little fair value gap, and then return to, and then start pushing up for higher prices. Looking for upside bounce off of this inversion fair value gap on the daily. I always forget to kind of look at my my website here, so make sure everybody's in case somebody's popped into the channel and they want to say hello. Yeah, nobody comes in yet, so let's kind of keep an eye on that and see where people come. We're gonna look for, let me just go to my studio here. Gonna kind of set up my you can tell I've got ADHD. I can't focus on, I can only focus on one thing at a time here, whilst I've got 10 other things going through my head. Let me just get into here. We'll create a little thumbnail here. We'll put that on there. Move this to here. Paste. No one's here anyway, so we'll save that. Okay, and then we'll look for, now we're live. We got some, I think we got some people popping in, which is nice. Good morning. Your channel. Let's go over here and see what we got. Nope, nobody's in yet. Well, welcome when you get here. All right, so that's what we got for British pound. We're looking for a break here. We're already working through this breaker again already, so I want to see that eat all the way through, get on the other side of that, and then start running back up. That'll be the objective on the British pound. Oh yeah, this is what was happening yesterday. We called this. Look how close this call was yesterday. Right here. So if we get down to the minute, I think, yeah, there we go. So this was the call yesterday, right off this breaker here. Last up close candle before run below low. So this breaker, we got off of there, and a stop loss was up here. And look how close we came for a squeeze there. Objective was just to fill this here, and we more than got that. Ran these old lows, so it would have been objective 1, objective 2, and then the final objective 3. But that's where we're going, so it kind of just ran for a quick 7 pips or something like that. Anyway, just letting you know how tight a squeeze that can be. You gotta trust your stop losses, and your broker may open up the spread there and take you out anyway. But that's just letting you know that the squeeze was pretty tight. Let's move further here. We're in a little consolidation. Ranges are, we've got the 50% of this range already. You're looking at the Mr. Fib tool here. There's your 50%. We've got the discount. Now you're pushing for higher prices. Or you come back up into this little gap in here and reverse down for a swing below this consolidation that's happening here. That's on the 1 minute. Anyway, let's get out of here so you guys can see what's happening overall. Same kind of setup for get rid of that guy. So this is the kind of thing, we have a break below the low. We have a fair value gap that will form at the end of the day today, hopefully. If we just get a small little fair value gap forming in here, then tomorrow we get a reversal into that, and we want to see at least half of that stay open for continuation on the downside for downside prices. That being these, we've already got these equal lows taken out, so we're looking for this next low here, this low, and then keep your eyes on these areas down here for a revisit for further downside on the euro as the American dollar continues to run up into its daily and weekly fair value gap above the market, which is naturally going to drive everything else down in the market. So no major play for me here. Gas, natural gas again, after doing this little up and down, continuation on the upside. This was the price leg I was looking for, 317. So we're still slowly chugging up here to get to that for overall price, which is good because I want to see it break above this high here. We've had a little pop up above there a couple of days ago. Now we're looking for a retest and see if we can't find some support above here. Get on top of that and start moving up a little higher. Australian dollar, again, as the American dollar continues to rise, this is going to drive prices down on the Australian dollar. We've already gone through our inversion gap there several times. Some we're continuing to work on the downside. So let's look at the weekly order block. We've got these two equal lows down here, along with the threshold, the mean threshold of this down close candle here. Yeah, at least a run on these lows here on the weekly. Daily. Yeah, daily we have some liquidity sitting below the market here. We've got little pockets of fair value here on the BISI. And we got some small BISIs down here as well. So they're still drawing the liquidity on the downside along with the American upside draw. This was the call we made a week or so ago. There was this little tiny imbalance down here, and we've just come to the top of it right there. So even though we took off here, we still ran out these lows here. So this could be the run on liquidity. I still think this looks too even down here. So I'd like to see that run further for the downside. Here, Australian dollar seems to have taken out its low on the daily. See, it's taking all these lows out already. It's driving through. A New Zealand dollar hasn't taken out all of its, well, it's taken out this cluster of lows here, but it hasn't driven down below its lower low in August versus, see how this has a lower low from August. So New Zealand is a stronger dollar, holding its price a little better than the Aussie dollar is, against the run on the American dollar as it goes up. S&P 500. We've got markets just opened a couple of minutes ago. We're in this little consolidation, so I want to see a big body wick get above here. Start looking for a run back up into a higher time frame. But let me get you out of this one because this can be quite noisy. So let's go to the daily here. Daily looks like it's got some more downside. So even though that looked like we're looking for a break in market structure to the upside, I'm still looking at potential for a drive down into the rest of this daily, or sorry, monthly fair value gap. We have weekly fair value gaps below that support price. This one is just short of closing in the rest of the monthly fair value gap and dipping into the 50% of the consequent encroachment of the BISI there. So I'm looking for this to drive down a little more this week. The rest of the week is to get down into this lower portion of the weekly fair value gap, and we'll see what goes on there. We could just go sideways for the rest of the week now that we've run this low sideways, build some booking. They're going to book both sides of the market, run them out, and then if our seasonal tendency is 50%, or our seasonal tendency is a low in October, your 50% coincides with a nice fill of the weekly fair value gap there as well. So the next big draw is down here. All the liquidity sitting below the market here with equal lows and more equal lows. Another weekly fair value gap around the optimum trade entry of the huge range that was started back in March to the top of July. So look for 50% at least of the range, and then that may be discount enough for smart money to start pushing price back up for this little price imbalance above these equal highs here, or relative equal highs, for this price imbalance for the rest of the year. We're looking for a run back up into here. If we don't, if we get a much deeper retracement and we're looking at 70% and we run that out, then you look for this lower time frame daily, which is a little pocket down in here as well. To run liquidity, that'll be right in your 75% optimum trade entry level. And that could be a sizable return if we start to push back up to 4500s. And with all the stuff that's going on fundamentally in the market, I don't know. I'm a technical guy. I don't know much about fundamentals. I read one thing. I got a buddy of mine who is deeply absorbed into technicals, and he can read one page of one way and another page of another, and they all contradict, and yet they're all professionals looking at where they think the market's going to go. In the end, one of them has to be right. One of them has to pick the right direction, right? So all we go is with the technical side of things. We have a break-in structure, fair value gap. If we can return to it, get in it, we can get short on it. We're looking for simple breaks. I have no idea about news that's going on in those days. I have no idea about fundamental stuff. All I can tell you is that technically this supports a run lower without any of that new noise of fundamentals. I look at it as fundamental noise, but clearly there are some people on Wall Street that would totally disagree with me. It doesn't even have to be on Wall Street. Anybody disagree with me, that's fine by that. I'm fine by that too. You do your thing, I'll do my thing. So that's what we're looking for in terms of fundamentally of the technicals. I'm looking for more downside, or at least a consolidation here. I don't want to see it run back up above this weekly. We've come back into the weekly here, found some support as an inversion fair value gap, which is great. That's what you're looking for. And then you want to continue on the downside, running for the rest of your fair value gap on your monthly, and start weakening, reaching into your weekly objective as well. Same kind of setup we've got going on here in the NASDAQ. We have a run to the bottom of the monthly fair value gap. We also tagged out at the daily. Nice, and we had a wick come through. The wicks came down, respected that bottom. We had a nice little swing point there. And now we're coming back up into this daily fair value gap here inside the monthly fair value gap. So we're looking, so we got a SIBI sitting here. We have some equal highs happening, some imbalance. We're at a return to the weekly, new week opening gap. Yeah. So do we continue through this and drive back down some more, or do we just come back into this big order block here, the new week opening gap inside this price imbalance? And are we gonna waffle around here until non-farm payroll? I don't see a lot in here for a lot of play. You'd have to be really nimble to be in this market right now. This is pretty consolidated. We have the new day opening gap. We're kind of banging around inside that right now from a couple of days ago. So I'd say stay out of this right now. There's nothing in here that would really warrant a major run. Yeah, we've had a body break here. We have a body break down here, fair value gap. If you can return into this low, or at least near the middle of this, or the bottom of these wicks, or bottom of the, where the body's open, if we can get into there, stop loss goes above here, keep it light, and run for back down here in these lows for a fill of this hole over here, then this BISI over here, this hole, this BISI over here. So kind of look at that as a, this is also inside the new week opening gap, high, low, consequent encroachment. We have another one high, low, and another one high, low. We've got quite a few of them there. So usually when you got these new day or new week opening gaps this close together, we tend to get a consolidation. You tend to get them bouncing around in there. So not a lot of faith in the old NASDAQ today. So we've got down through our 18 that we were calling it way back here. I do like to go on and on about my calling the gold down this last couple of weeks. Now we're into the 18, low 18, so I still see, if we're looking at on the daily, we've just come back to the top of the week, the monthly fair value gap. We dipped into it here, and now we're going to look for a bigger run. I'm looking for a big pull down into this monthly fair value gap. Let me show you what that looks like so you get an idea. That's the monthly right here. We're just coming, we've just tagged the edge of it here now. We've already run into it once. Now you want to see the midpoint, which would be just enough to run this low out. And if that stays open, that would be a nice little breakaway. And then we'd have to get on top of these as little stepping stones to get up higher prices, to push up over $2,000 again. I got this, I like this one down here, so I think there's more, at least to run this low out here. We do have 25–50% of that wick before we get into the fair value gap. Or no, while we're inside that fair value gap. So the BISI, you break that up into 50, 25, 50, and 75, 100%. That's kind of like the range we're looking for right now in terms of lower downside in gold. And we just broke the 50% of this range. 62% will come back and give us a fill of that whole BISI. So I'm heavier on gold right now. I'm still heavy on gold. Nothing's really come up to give me an indication that gold is turning just yet. Weekly, there's nothing on the weekly that shows me it's on the turn. Daily, nothing on the daily that shows me there's a turn. No. We may see a pop up into this, which fair value gap here, which is the daily, now becomes an inversion. So this inversion here, inversion fair value gap, we want to see that provide support. So if we do get upside today, I want to see a run back up into 834. So you got another 835, somewhere around there. So you got another $5 run in gold to the upside. Hit this, stop, turn around and come back down. It can dip into it. We can even return back into this new week opening gap, which is, I wouldn't want to see that fill. I'd like to see that stay open and continue down. But that will be the objective for gold. 35. So we're not too far away from hitting that objective already. I have it sitting down here at 1835. Good morning. Who said it? What's up, brother? Do you have a good night? Your night shift was good, I hope. Everybody's safe there. So we're going to look for this, a play off of here perhaps, of this new this fair value gap on the daily. We're looking for this inversion fair value gap to hold price, come back in, and then start driving back down into our lower time frame objective. So we'll wait for a reaction off of that, a break-in structure, get in, and then continue down on the hourly. Night shift was all right. What is it you do again? If you don't mind, you don't have to say on here. It's on the internet. I appreciate that if you don't want to say. Let's put the old Breakfast Club up here. See if anybody actually turns in, pops into the Breakfast Club. Basically, it's just a Skype thing I have. If you want to come in and chat, we just do it instead of having to type. You can just chat and stuff. Oh, corrections officer. Ooh. Numbers at the top of the hour. That could be pretty rough, corrections. People giving you lip, attitude all the time. I'll walk around peacocking and stuff. You mustn't be able to learn how to read body language. You and I have a lot in common when it comes to our careers. You learn to read body language pretty good. You can see just by looking at people how to read them and read their body language, read if there's tension in the air. You can feel it without even actually without actually hearing somebody say anything, but you can feel tension in the room, I bet. Need to order a new mic. Yeah. Like you need to order a new mic, or I need to order a new mic? Because if my mic's screwed, I got a fancy Rode one here. I got some complaints if that's happening. Hopefully you guys can hear me okay, or you can hear me okay. There's no other guys here except you and me. Oh, you need to, okay. So this order block, we're in the threshold, mean threshold of this order block. We've just kicked off of that. Now, are we going to start a drive down, or do we reach for my 1835 I was looking for? It's fine if we don't. Still wait for a setup to happen after 10 o'clock. We look for the silver bullet entry and aim for a 15-minute or an hourly higher time frame objective. Crystal clear. Good to hear. Yeah, if you want to get into some awesome conversation, you get one of these little boom mics. These Rode mics, R-O-D-E. It's probably not pronounced Rode. It's got some little fancy slash through the O. Rode. Maybe it's a German make. It's some Rode. Where are we at here? Let's get back on this. Waffling. Everything's kind of waffling right now. Nothing's like a super good opportunity to take a trade. This is a nice little oil trade that happened a couple of days ago. We broke structure to the downside. We came back, hit it, aim for here, and your first objective being your old fair value gap high. We came back, hit it one more time. Aim, objective 1, 2, maybe the midpoint 3, 4, and then finally this guy down here. So look at this inversion gap here. We want this to turn into an inversion fair value gap. If we can get on top of that, get back into this fair value gap on the daily, or that's just going to provide some support. We're going to kick off of that and come back down again. So the wick does the damage, comes up. Do we kick off of this now and keep coming back down and bringing oil down? What is oil looking like? Oh yeah, okay. This must be an old one then. Yeah, it's old. It's an inversion one. So there's a fair value gap back here. We've gone through it, come back into it, tagged it a couple of times, ran above, then ran all the way through it. Now we come back to it here. Are we going to continue down for a weekly objective? Our weekly objective down here. So are we going to push for the top and middle of this? So that's the feeling I get, is we're going to start to run down into this lower time frame weekly objective. We have another one over here. We have one here. Daily fair value gaps on the way down. So yeah, my guess is we're going to continue. We're going to push down again on this. If this fair value gap holds, we have a body breakdown below this. It would be nice to get a return to this before running down here next week and push price down into the $85 range for oil. But some people say, no, it's not going down there. Well, once this candle was going up, everybody's like, oh, you're breaking market structure. Come back down. No fair value gap forming in here. Nothing for me to get on top of there on the daily basis to go long. But if you were going to go long, let's see if there's anything in there. There you go. There's a break in structure. Fair value gap. You come back inside it and then see how the body trades through it right there. That's when you're like, I'm out. You got to get out if you're on a 4-hour setting. So you got to be willing to endure that before you hit your stop loss. It's pretty close to taking your stop loss out, but if it ends up right here with the body below it, that's my rule to get out. I had a couple of trades early this morning. I've been up since 4 in the morning. So there was a couple of them there that I was taking that were, as soon as they broke through my rule, you take as small a loss as you can. And if it continues through, so what? That's my rule for inversion gaps anyway. So we want to see this kind of hold price here. Get back up and continue up. Or that holds price. This doesn't. You break down, come back into it, and then continue through, taking out these lows. So that's kind of like what... one of two directions that you can go in here. Again, this needs to hold price, and then we need to start pushing back into here, or the fair value gap on the daily becomes the inversion gap. Hold price here inside this order block threshold, mean threshold, and then we're going to push for lower prices down here and continue pushing oil down on the higher time frame objective we're looking for, which is further downside anyway. This may be one of those, just create the fair value gap. Tomorrow we get a small little candle here today where it doesn't really do a heck of a lot. That becomes our fair value gap that we're reaching for to get back inside. So as soon as you come back, tag that or just get inside it. You want to short that for lows, for whatever the immediate low is that's created today. Unless that comes all the way back and fills. Then that whole kind of objective is off because we don't have that fair value gap we can key off of. We're actually working on an inversion here. That's just a mess. That indicator can get super messy. So we've ran all the liquidity out in here in New Zealand. I just quickly ran them out. Now, does that create the low of the month for October? That certainly would validate it and say we're good for that. We've come right back into the top of that little tiny itty bitty little price imbalance down here on the daily. We tagged the top of it. Now, are we going to work it back in there and just clip it one more time and then start running back up? Or are we going to drive for these lows here? Because the Australian dollar already cleared out his lows in August. So we have a divergence between these two, back and forth. See how this one has higher lows, lower lows. There's your equal lows back in August. And this is back in August is equal lows. We haven't even cleaned those out yet. Oh no, here's equal lows. This is September. Yeah, this is the same time as this right here. So we haven't even come down anywhere near that yet. So it looks like New Zealand dollar's got a lot more strength right now than the Aussie dollar. Aussie is losing it pretty good. If you look at the overall price action of the American dollar, if we look at the American dollar, let me get a chart up here. Here we go. This is the American dollar. Higher time frame objective for the American dollar. Look at this big pocket up here on the daily. That'll be the upside drawn liquidity is up here. We still have this pool of liquidity above this order block here. This high, and then this opening sitting right here. So we still got upside draw, which still puts downward pressure on the currencies and puts downward pressure on gold as well. So if we're looking for this pocket to fill, or at least to run above these old highs here, this looks like the drawn liquidity for me. We could see a wick down to the top of this and then a continuation on the upside, which puts more pressure on the Australian dollar and all those other foreign currencies. So that will continue to put pressure here on these guys. Gas daily is pushing back up again. Again, my upside objective for the short term is 317. This was the new price leg that I was looking for. And it's a slow, steady grind up. We want to get above here, come back down on top of this, then ladder up onto that, and then slowly continue to push our prices up through the winter months. Euro dollar. Euro dollar's got, again, more downside if the American dollar continues to run up. So if the American dollar just dips back now into that, if it dips back into the lower objective on the daily, we could be reaching back into, we have a break in structure. Next hour, next day, run back up into here, and then continuation on the downside. That's what we got starting to form today, so we may just get a small candle day today. Wednesday push up, and then continuation on the downside for the rest of the day, the rest of the week. Pound. Same kind of setup. We want to see some support off of this inversion gap here now. That becomes an inversion. So if we can come back into here, find some support around this price here, and start to drive back down for this lower objectives, then that might be the direction we're looking at for British pound. But otherwise, today's kind of looking like a hands off, don't touch, or maybe we can get something on, I like this guy here. We got up at the top of it again, so we're pushing for here. We're going to look for maybe something in gold today that kind of supports our price. Ooh, there you go. Look at that 10 o'clock. instantly 10 o'clock opened up, slammed down. Oh, looky, looky. See that right on 10 o'clock, just opened up and slammed down, took out the lows. And we want gold to continue to push. This is run all the way up to taking that little fair value gap out inside the threshold order block. Now, are we just running down? There's a little inversion gap here. Are we going to start to work this monthly fair value gap for the gold, which is what I've been looking for a little bit now? So I want to see this gold give a run down. It might just come down to run these lows out and continue on the upside. So again, I don't know which direction it's going to go just yet. I'm heavier on gold. I like to see it go down some more. We just ran the lows out on the 1 minute. Wow, those numbers. Which numbers? Kind of like an inversion here, right? We broke through it, come back up, found support at it. Are we going to keep pushing through, keep driving down? I'm heavy on the downside with gold. Jobs are better than expected. So that, interestingly enough, that's good for the American dollar, right? When we talk about job, so that was the news release. Was that a news release there for jobs? Yeah, 10 a.m. News release. Better. So what that one actually supports price, right? So if you're looking at this is greater than forecast, is good for the currency. And what are we expecting for the currency? We expected that the currency would go up. We looked at the American dollar. Remember we said for this one here, we said the dollar would go up. We're expecting it to go up. But I wanted it to come dip down in there, right? But that's our higher time frame objective. So if it doesn't dip down there and it continues to run up, that's great. A heavy push into this. Keep your eye on this area up here. So we're heavy on currencies and we're heavy on gold, just as predicted. So now we're looking at more downside on the gold. Wait for this news event to kind of just settle itself out a little bit. So you want to look at your silver bullet entry. Holy smokes, look at that sucker right there, right off the 10 o'clock. What would be your objective to aim for? These objectives down here. So 18, $5. Looking for a $5 pump down. So do you get back up into here? I would want it to be in, if I'm going to take something in here, I want it to be 50% or more. So it better come back into this thing here for me to get short on that. Stop loss there. Keep your trade light. And if we don't get on, we don't get on. So we got 1816 is that downside reach. And then we're going to get back into that monthly fair value gap. What do you got for the downside? Keep an eye on that. Sudden gap down. Still heavy on S&P, aren't we? That fair value gap, we're going to continue working that in the monthly. We got the weeklies down here, so there's definitely heavier on the monthly and the S&P 500. Yep, looking for a further drive down here on that. So can we get anything in here in the 1 minute? Nope. There's no chance to get on that yet. So same as the gold. See how the gold and they're pretty much the same. We can't get on that. We can't get on that. And wait for it to turn into a premium to get a discount. Yeah, it's a nice steady run now. This isn't one of those panic days either. You go, oh no, I'm missing it. Nah, there's plenty of these happen all the time. I can't see, the only opportunity I see right here is we have fair value gap, we broke down. That becomes an inversion now because we've already gone through it. You come back inside it, look at that. Nicely, and then 7 minutes later you hammered down. That would have been a nice entry. But before the news release, probably not a smart place to situate yourself. Don't like trading news. Still too new with Silver Bullet to understand how it works with the news. ESP, when it comes out, when Silver Bullet starts at 10. Yeah, I totally agree with you, man. News events, you never want to try to trade a news event. Michael's got a technique for trading news events. And he says it's pretty effective, but not guaranteed. Like nothing's guaranteed. You got about a 70% accuracy with it, which is still pretty good. He's got lots of videos on that. Trading PD for news events and non-farm payroll. But you definitely don't want to do CPI. CPI is not one you want to even touch. There's our guys out there that go, bullshit, man. It's easy to trade. No, it's not. Not what I want to get into. Is this one right here to get short? Stop loss would go here. We're going to pretend to paper trade that one. That's where we just called it. I want to see if this... stop loss goes here. Because if we lose the threshold of that, then I don't like that. First objective. I know I always like to go to the first low, but I think I've shown you lots of times now how that can be a simple run there and then turn around and go right back up. And if you haven't paid the trader something, at least it offsets some of your losses if it comes right back against your stop loss. Okay, so that would be everything in on your silver bullet. And you wait for the 12 minutes. So I'm going to cancel that because that's not where I would take this. I would take the next one that's starting to form right here. And actually, I think I will take that. But I'm just going to catch a reversal. And you're trying to get back into 50% of this range here. This is the one you want. We've already eaten through this now. That's not valid anymore, and you would have taken your stop loss. Now here's an interesting thing about this time. The other day you said the 16th and the 17th hours were drivers and 18, 19 were reversals. Was that your time or trading time? That's my time. That's whatever my little, if you look down in here, you'll see this, my server time is 1700 hours, 1800 hours. Yeah. Remember 12 minutes? Look at that. Big reversal. I'll get short there. I'm kidding. Don't get anywhere. Don't even touch this right now. Don't even touch it. That's why I don't like to take the first Sibby, or sorry, the first silver bullet. I wait. Unless the first silver bullet is around 1712, 1717, somewhere around there. So for you, that would be like 10, 12. I'll let the first 15 minutes settle out on a wick, and then let the rest of the hour do its thing. I'm not giving up. No gains we've made on some news bullshit. Good for you. Yeah, no. Don't touch this. This might be just one of those days you just kind of watch some price action and don't stick anything in the market. Don't put anything at risk. Keep your powder dry, as Michael would put it. Here I got a joke for you. This is a corrections officer told me this joke. I used to teach, and I was teaching in Manitoba at this place called the Rockwood Institute, and another one was the Stonewall Penitentiary in Manitoba. And I was teaching inmates a first aid program because I was working for St. John Ambulance. So I was teaching these first aid programs, try to rehabilitate inmates to try and have a job when they left. So the government had this government-sponsored program where we would teach them how to be instructors in first aid, so that when they got out there, they could find an employable job, and they could actually start their own business up and teach first aid programs for different people. Actually get a working job, and they could start their own business. And we were in this course, and then I had to teach the guards. Like the following weeks, I taught the guards basically their standard level first aid, because they all have to have it. And this guard says to me, he says, "Hey, I got a joke for you. how many inmates or how many guards does it take to push an inmate down the stairs? I was like, I don't know, 2, 3 maybe. He says, nope, he fell. Yep, stand-up comedy, not my thing. Euro pretty much filled the entire gap. Euro filled the entire gap. Hourly. Yeah, it just ran the lows out here on the hourly, and it's pulled back into that consolidation again. No big push, no desire to get anywhere other than just quickly run the lows and then come back into that small area there, which is kind of like what we're looking for. Is a small little candle to form today, so you might get a little wickie on either side, and then the body end up being a small thing, opening up, run up into this fair value gap for tomorrow or the midpoint, and then run for lower prices. That's kind of like what I'm looking at for the daily. So I don't see a lot of activity coming out of here today. I would like to not see a lot of activity coming out of here today, as it were. So that's the kind of chop you want to see, a little bit of this sideways stuff and then the run back up into breaker to get lower, if that's where we're going to go. The day is still young. Inmates always hurt themselves. That's true. Yeah, I was teaching there, and there was this guy called Denton. He was a guy who'd shot some old guy. He blasted him with shotgun. Anyway, he was in there, and he was dealing coke, and he would cut it so much with foot powder there was hardly any coke in there, and the boys decided to take issue with his business acumen. So they ended up taking a barbell plate, and they tried to amputate his hands because they said he was. So they ended up smashing his hand with this barbell plate. They cut his hand open, and they tried to cut it off with this, or smash this plate and crush his hand. And ironically, the only thing he had left was his hand was so mangled, all he had left was, ironically, a shooting finger. His trigger finger is all he had left by the time they'd finished with him. I went in to teach that day, and they were like, nope, it's shut down. We're done. Well, we've closed everybody in. I'm like, well, what happened? There's been a fight, a bad one in the gym. I'm like, all right, I guess we get the day off. But I tell you, there was some interesting days. I got 2 guards sitting in on my course because I have to teach 7 inmates, and the guards are sitting in on the course, and I'm trying to teach. I get to this thing called on eye injuries. So I'm teaching eye injuries, and this guard says, hey, you know, there's this particular guy over there who's got a real anger management problem. He gets angry really quickly. And I'm like, well, what's he in for? He says, oh, he cut out a guy's eye. I'm like, oh, great. When we get into eye injuries, this is really going to be great. So I didn't want to bring back any emotional trauma for this guy. So he's like, yeah, just we'll keep an eye on him. So anyway, I started asking these guys questions, and this guy answered. And I was like, no. And he goes, no? What do you mean, no? And I was like, well, yeah, maybe. Possibly. Like, and I look at the guard like, shoot him. Yeah, it was crazy, man. It was, you watch these guys, they got a look in their eye. It was like, man. And then there was this other little kid. He's sitting in the corner, and he's eating Joe Weider muscle up. I don't know if you ever remember that stuff back in the day. Joe Weider muscle up stuff. He's got his tub of it, and he's eating this stuff, and they're making fun of him. He's like, yeah, I'll kick your ass. Little skinny kid trying to get big in prison. Oh, the poor guy. He's walking around eating his powdered Joe Weider muscle up, putting it in drinks, trying to be intimidating, and all these big guys around him, tattoos, evil looks in their eyes. I thought, man, this is one of my best career days, teaching first aid in a prison. And then at lunchtime, they have to hustle you off to the for chow. So I got a guard on either side of me. Let's go. And you got all these inmates staring at you like, who's this fresh meat? And then I say to them, oh, hey, you guys, I want you to teach me some stuff. I was like, tell me what I said, tell me what keep 6 means. And the guard's looking at me like, what are you, and I'm like, they're like, I'm like, wait, don't tell me. Keep 6 means you have to keep 6 bad things in yourself or somebody else. Like, you have to keep them. And they're like, oh man, you'd be a bad fish. I'm like, bad fish? What's a fish? They go, a fish is a new guy in the pond. You'd be terrible, man. I'm like, oh, sorry. I had no idea. They're like, no, keep 6 means watch my back. The guys are coming. I was like, all right, good to know. I'm lucky, 17 years. Been in a few minor altercations, nothing serious, but it's a county jail, so people waiting for trials and such, about 350 inmates. I work a medical clinic. Oh, cool. Yeah, you and I would be working there, man. That's where I'd be at. Only 12 inmates in my unit, so it's nice. That's what seniority gets you. Nice, easy unit to work. None of the real jail bullshit. Yeah, that's true. Yeah, I got on so good because it was a week-long instructor course in first aid. I got on with these guys like a house on fire. We got along great in the end, and we were talking about like skinners. They call them skinners, like people who have like sexual offenders and stuff. And these guys were like, they instantly go serious. Like, oh, if one of those effers were in here, we'd kill him, man. And then they talked about this thing called, I don't know if you have ever heard of it happening down there. It's called running the gauntlet. Have you ever heard of that term before, running the gauntlet? Anyway, running the gauntlet is when you get a skinner in there, and the range has, the range has several dozen or 100 cells in it, and they put one guy, this guy at one end of it, and they say, if you can make it to the end of this, you can stay, and if you don't, you're gone. And they said there was one guy they had in there that they made him run the gauntlet, and all the guys were in their cells, and they just kind of step out onto the range and beat the living crap out of this guy. They said he made it to the end, but never came back. He went to infirmary and he was done. He says the guys get thrown off the range, they get beat up, something fierce in there. So yeah, it's pretty crazy. That's called running the gauntlet, apparently. The guards were like, wow, this is cool, man. We're learning some interesting stuff here. I'm like, I love asking these questions. And I said to these guys, hey, is there a lot of sex here? And these guys they're like, what? They all start laughing. I'm like, there's a lot of sex here, isn't there? I mean, like, seriously, of all the inmates here, they handed out 1,200 condoms. So I know there's a lot of sex here. And these guys are laughing. It goes, oh, that's just the lifers. It goes, you guys all have sex with each other? And they're like, no, we do not, man. That's just the lifers. I'm like, oh, the lifers. Good to know. Good to know. I'm like, you guys aren't in for life, are you? And they're like, no. They're hot. They're laughing away. I'm like, man, I got away with some good shit with these guys. It's hilarious. Yeah, it's crazy how in jail they take care of their own business and have morals. Yeah, that's true. But out on the street, they're wild. It's true. Now, they got a code of conduct, and being a rat in there, ooh, that's bad. You rat somebody out, you better stay in solitary, man, because when you come out, you're going to deal with the boys, the punishment. Yeah, we got a waffle day today. Just sitting sideways, not doing what's this one? Oh, that's Aussie dollar still. American dollar still pushing up. These guys are coming back down. I like to see that New Zealand dollar run this low here and run these equal lows out down here, kind of like Aussie dollar. I want to see it run those lows out in August. This should do this kind of crap. Sometimes you get a nice little run up into December with a dip down and then a push up for the rest of the year, aiming for these higher objectives. I want to see this kind of just waffle in here for the next month or so, and then create a nice little breakout reversal, and then aim for this up here for a nice little run on a long term at the end of the year. Beginning of January, somewhere around there, mid-January, run up for these old highs up here in this imbalance. And And this guy, oh, look at this. This is driving down. This is a, yeah, look at that. All the way down, all the way up, all the way down, all the way up. That's why you can stay out of it. You get beat up in these markets like crazy. But you can see the PD array. Feel that your stop loss would have gone above the next high. Run all the way back down. You're starting to feather out of your position. Order blocks, feather out them. Lower time frame objective down here. Fair value gap down here. Order block. You'd be aiming for here, but you'd be scaling out. This is why I like to scale out, man. You've got to pay the trader on the way down, even inside this internal range of liquidity. Because if it reverses on you, it comes all the way back and cleans you out. And you've missed all this opportunity to make some extra cash along the way. Snitches get stitches. The wolves get hungry waiting. Take profit. Have to feed them along the way. Yes, yes, yes. Indeed we do. Feed the wolf. A fed wolf is a happy wolf. I can't even really put the bot on here just to let it play around in somewhere. Ran that. So now this would be a, let's do a paper trade here. We're inside this one. Fair value. This is an inversion gap maybe. Stop loss goes here. We're going to say we entered in down here somewhere. We're looking to get out. 1, 2. Jeez, it's happening faster than I can draw it. There you go. So we got in there, paper traded it. There's your first one out. And you're looking inside this range here now, right? So we're looking for here. Now, because it broke that low, I take this puppy here just because this markets can be really screwy, and I'll be moving that to break even. So I got a little piece out. Stop loss is break even. Gold 5-minute chart, 1020 has a fair value gap and just got filled. $10.20 gold? $10.20? You mean $18.20? So this is kind of a, this is just the paper trade that we just taken. So you take 10% out there, 50%, 80%, 90%, and do you get the rest of it? This would be like a stress-free trade right now, because now you've broken even, you've taken 10% out, and if it trades back against you, no big deal. Now we've just come back into that little fair value gap there. We've just broken the structure here, come back inside. Same kind of setup that we're looking for all the time. We want to see this fair value gap get broken to the downside. We want to see the fair value gap form here. Once we break a slight little break in market structure, we'll come back into it right here, inside that inversion gap, and then we want to push all the way through. If we don't, what's the 50% of this little tiny thing here? I like doing these all the time. There's 50%. So are we coming back to a discount to continue pushing up higher? Zero stress. Again, no loss. We've taken 10% out. %62 lines up nicely with our next objective. 79%, 75%, all within our optimal trade entry if we get down there. Okay, yeah, no worries, man. No need to apologize. All good. All good. Yeah, that's the thing with MetaTrader, right? The only reason I like MetaTrader is it supports my bot. That's the only reason I use it. And the fact that my what the hell is that? I'm thinking about that prop firm runs on this as well. So we just came back into that imbalance. Gapping up. Ooh, put a squeeze on us so far. I'm going to take it. That would have been out by then. So we would have had at least 10% of our trade off. Pay the trader, man. Pay the freaking trader. Below the low. So move to break even. That would have been a zero stress trade. Would have came back, taken us out. 90% of our trade would have been broke even. The rest of it would have made 10%. It's a nibble. It's cheese, man. Get some cheddar in the fridge. Little price imbalance in here. Rejection block. Into that. Equal highs. Order block up here still. This would be mitigation. We did not break any old lows here. This is the breaker. Around these lows, around these lows. Threshold. So you kind of watch the PD arrays as they start to chop their way through them, right? So you're looking at the mean threshold of this order block. Does that hold price? So with all this chop, see, you can still nibble out a little tiny piece there as long as you're disciplined enough to take it out below that low. And if you say, well, that's my objective there, and always my fair value gaps are objectives, you would have been there, another piece there, and you wouldn't have made anything else. So let's get these things off of here now. We're looking up here. Not that I'd actually put a trade in here, but I'm looking to see if this one provides some level of support. Or we're going to continue pushing to the upside. Nope. So now you look for the next PD array rejection block. We're through that. You're looking at the wick. We're through that. And then you look for the high. And we're through that. There you go. Nice. So that little piece there is a good example of, even though we're on the wrong side, if you're disciplined enough to catch yourself just taking a piece off there, move yourself to break even on your first profit, it comes back against you. Not that you can celebrate these little victories, but it's more about how to manage that, manage your money and protect it as quick as you can. Not that you should chase your stop losses all the time, but just look for objectives that make sense. A quick PD array that you can take some money out at, and just keep nibbling away at your market like that. NASDAQ 100, only one that I'm watching that hasn't closed that news event gap yet. 100. Where is? You might be on a different. You might have a different representation of your on the news event. Yeah, I've got my news event closed. Your one might still be open. This might be an open wick here. Only watch 4. So not much, but 3 out of the 4 filled the news gap. Oh yeah, let me have a look here. 1 minute, of course. Yeah, you're right. So if the news event was up here, that hasn't been filled yet. We're into this little slump consolidation. See, this is accomplishing what we're looking for on the daily. We're in this consolidation on here. This 500 on the daily. Are we getting those little tiny candles? We're pushing down for more downside. Run this low inside this weekly. Nothing to get on there. This would have taken you out there. Yeah, these maybe. I wouldn't have gone in this anyway, because I would have liked. So if you're looking for just your basic setup, which is your break-in structure with a fair value gap, if we would have got up into here, that's a place to get short on it. Didn't happen. So you look for the next break below. Look for a fair value gap. We don't have one unless you're looking at this itty bitty one in here. I wouldn't have seen that anyway. So we break down. Here's one here. Stop loss goes usually above the candle that makes the fair value gap. So even if you put it above that one, you still would have been taken out. So that one's no good. Order block. They just returned back to the order block. This is like a price leg coming down now. Where do we see this settling on the rest of the day? Right down here. So So we'll see if that settles out down there for the next price leg down. Break in structure, small little fair value gap. See it short there. Objective here. It's like 7 handles or something like that. It's not a lot. We're not going to try and squeeze out a trade that's not there. But keep your eye on this level here. That's where I'm kind of looking for that price leg to finish off down here. So that's the return into that little tiny fair value gap right there. A little pocket of price action right here. Keep your eye on this little piece here. Stop loss would be like right here, really small. So if we get above this wick, that would be like a paper trade there, just to see if it supports the idea of a break in structure, downside, fair value gap there, enter there, stop losses here. So you got 1, 2, 3. There's a little tiny piece in here too. You see that reaction? Went all the way back up and filled that perfectly right there. Now we want this to create an inversion. Support. Continue down, fill. But you're kind of stuck between this one and this one. See, that's the order block on the upside, the breaker. And this is the order block on the downside, not a breaker, because it doesn't go above this old high here. But it's just a basic order block. Breaker, order block. So you're between those two right now. So this threshold, if this we lose this threshold, well, we've got further downside. And that would be your first objective. I know it's tiny. That's why I'm saying this is not really worth a lot of putting money at risk when you're in these tight consolidations. I just want to show you what PD array to PD array looks like. So you're really between here, that threshold also is the fill of that fair value gap inside of a breaker. You ran those lows. That creates a breaker, fair value gap, hit it, and leave. Lower downside objective is this order block high, which already through the high, through the body, and we've just hit we've just hit the threshold here. So now you're back to here. So now we're running out of PD arrays. We're here to here. Now it's like, now you got to extend. Which other PD arrays have you got? Well, you've got above, that's your rejection block, and you've got rejection block below. So those are the, and then you have to extend above and below till you blow out these highs here, come back into these PD arrays, or extend further down to the downside. These lower time frames, you kind of start running out of your thing, and you start to reach for higher time frame stuff because you're running out of them in the little lower time frames. Gold hit 1833. Oh yeah. I'm not ready for gold to do a reversal yet this month. I'm looking for a daily reversal on gold though. Yeah, this is just coming back into the 1835 we called earlier. So 1835 is our upside objective for gold. Yeah, right there. Where were we on this guy here? Yeah, okay. So I want to see this continue extending down. This is why it's kind of like, I just want to kind of show you the old PD array to PD array idea, right? One to the next, and when they run out, the price has to start extending the range. So we're kind of inside here right now. I think in pre-market you said something about this hitting 1835 area. Yeah, that's exactly where we said for it to hit. So now we want to run through this PD array. There you go. Now you want to see this continue pushing down, supporting our idea that this is the basic setup that happened really tight. Not a great way, but it's a basic setup that we have a breaker here that broke below structure, created a fair value gap. Inside a fair value gap and a breaker, you can load on, get short. In this particular case, stop loss goes up here, very small, but see how we've taken a, now you take off a little piece there and aiming for our objective down here. So that's a setup I like to see. That's why my eye kind of tunes to those. But again, it's not one of those trade days. And you'd finish up with how many handles in this total? There's 7 handles. All the way down here is 12 handles. That's not bad haul. That's not a bad haul. And just tap the objectives just to make me feel like I know what I'm talking about. So same kind of thing setting up here. Do we have a little fair? So when you see this stuff, kind of look at it like you're, all right, now what I want to see is I want to see a fair value gap. I want to see this stay open, create a little fair value back, come back in, trade into it right at the bottom of that candle there, which would be almost like the midpoint of this. Would be really nice to get short. Again, aim for this. If we're going to be dicking around with these little tiny candles, that's what you want to kind of see happening in here. Well, that's what I want to see happening in there. Or just keep running through here. There you go. There's your fair value gap. Bang, bang, bang. Now you want to see that run back up into here or halfway, which is bottom of that order block. Mitigation. Last down close candle that does not run above an old high. That's mitigation. Mitigate off of that and then continue down and get my damn objective. Looks like a paper trade win. Yeah. It's just more just to kind of give you an idea of what to look for in terms of your setups. PD arrays are always happening. Like this, people think this is just, there's nothing organized to this at all. But if you really drill down, you can still see inside it PD arrays that it's still hitting on the 1 minute. Now, if you go down into the seconds, or second chart, or 20 or 30-second chart, you'd start to see PD arrays high, low, premium, discount. Like if I pulled the fib tool here, just out of curiosity, if I pulled the fib tool from here to here, look at the return. 62, 70%, right on the money, inside the PD array, inside the breaker, inside the fair value gap. Holy smokes, get short right there, exactly what we were calling when it was happening. And then we're aiming for a 1, our next low, and then obviously the rest of the arm. So there's a good example again on a smaller time frame. If that was daily candles, same kind of setup, right? And that's a common setup. And you'll get to the point where you'll start to see this kind of stuff forming and you go, oh, I want to see it set up now because we've got, this is the setup we just called 2 minutes ago. So I want to see here, this run back into this area here, leave it open or leave that one open, return to the breaker, and then get short again to finally fill my objective, or just get my damn objective here already. Come on, prove my point. Tap it. Tap it, tap it, tippy tappy. There, come on. Ding, there we go. Hallelujah. Hallelujah. There's your price leg. Finished right there. Again, not that that's the bottom. It's just pointing out, or what I want to point out here is what a price leg looks like, right? There's your price leg down, your retracement, your expected price leg down on the downside. High to low. Retrace down. Perfect hit. Doesn't mean to say it's not going to continue down, but at least that's the price leg. If you're aiming for that, you're saying, well, I got in here and I've come back to breakers. I hit the breaker. I key off of that, and I think that's my next price leg down. Then you could literally project that as my overall objective down. Now, is there something down here? If I bring back, if I go all the way through all this lot, do I see anything back here of sustenance? Where are we? Sorry, I have to kind of scroll back all the way here. I'm on a 5-minute. Jeepers creepers. Nothing. Okay, let me see what the hourly's got. Jeez, man, there's nothing. Okay, let's go 4 hour. What's back? Oh, right there. That price leg finished off the rest of that fair value gap there. There we go. Is that it right there? Yeah. Came back to old highs right here. But we're not finished, right? This is the weekly objective we call for in a pre-market analysis, is this downward, that's the objective downside. 4 hour, we got a nice little pocket of 4 hour fair value gap below the weekly. So right now I'm just looking for the downside on the weekly to get hit. Let's get back into our minute. So you can see with the idea of where to find an entry. If I couldn't get my entry up in here, I couldn't get it here, I couldn't get it off of this guy, you finally have another break-in structure here with the 2 fair value gaps. I always like to go to the second fair value gap. In this case, it only hit one halfway through. It is an entry point. And funny enough, that's your 16, 17, 17 right there. There's your 16, 17, 17. Reversal back into it, and then continue down. So there's that first 15 minutes where you get to see, does the market really give us a fair value gap I can get into for my silver bullet entry? There's the silver bullet. We didn't get a chance to get into it. No silver bullet. There is one here. As your stop loss goes above the high of the candle that makes the silver bullet. That's just my rule. Michael's might be, I don't know, up here somewhere. Order block. Then I would have been taken out. Somebody else may not have been. And that would have been your run below here, and then aim for further downside objectives. And once you identified that this was the price leg happening, then you could have just said, well, now I'm going to extend my goal, which is right here. And now we're bouncing off that price leg. Edit. Gold dropping. It's going to create a gap before 11 and then run up to your 1835. See how it's bouncing off of the fair value gap on the monthly? That's the tippy tappy here. Run back up. It's got a lot of liquidity. It's kind of booking. See how it's kind of booking all the buy side here to go along? It's already taken out the shorts. Keeps taking them out. Now, if it keeps booking this, it might just have one more dip down at lunchtime, because now we're coming up for 8, 9, so we got 11 o'clock New York time we're coming up for. So you're looking for lunch hour, run the lows, then come back up and clean out this. So this would be like the pump down, run up, and then run back down again. These are kind of good examples to watch these for, see how these areas provide levels of sensitivity. So for the last 1, 2, 3, 4, 5, 6 hours, we've had sensitivity, or 7, 8. You've had sensitivity at this area from the bottom and the top. It stands to reason that these higher time frame fair value gaps will provide a level of support for us, or resistance. See how it comes down? Tang, tang, ran through it. Tang, 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 a bunch of times here, ran back up. Tang, 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 bounced away on this level here, then ran through and ran away from it. What do? We come down here, tang, 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 tang. We kind of keep looking at back and forth on the edge of the gap, come back down, back up. See how this whole area, there are levels of support or resistance depending on how they're run. All right, that one worked out good. That's like precision right there, man. I like that. There's only a couple of, like a buck. 60. Yeah, just short of $1, 90 cents. It's nice when it works out. It'd be nicer if you're in it. That, my friend, is the discipline we show when we just say, you know what, markets are not giving me what I'm looking for right now. Yeah, you can dig in there. Yeah, you can find something. But you have to trade 100 times a day, 50 times, 20, 10. Just wait for, like Michael says, low-hanging fruit. Pick the low-hanging fruit. And if it means waiting a day or even the week, that's what you got to do. So what do we got here on the 1 minute? If we're still looking for higher upside prices. Pocket down here, discount range. If I'm looking at this whole range here, we're internal range liquidity searching right now. Look at this. We have a, not really a big break. This was the break below. I was going to say, here's your, I bet you on this 30-second time frame, there's an entry. This would be the entry for a run to go lower. But we don't have that. We just have it come back to an area of support. Yeah, I don't mind watching the market do its thing on big news days. No need to take a loss and give up gains of numerous days in one trade. I like your logic, my friend. You get a heart for that. You get a ding, 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 ding. Multiple hearts for that. Well, way to go. Good thinking. That's mature thinking. You can tell you're in your 40s, man. You've been hit a couple of times in life financially. You know what it's like to work hard for your money and hold on to it. You don't want to go to work, take all the bullshit you take from work just to come home and give it to a market. That's for sure. So breaking structure, fair value gap, return inside the fair value gap, get short. We're aiming for these two equal lows down here and this stuff down here. Without a doubt. So your stop loss would be above this candle here. Again, watch your leverage. If we break that low, I like to come down, take myself a little bit of action, a little bit of profit, move to break even. We're looking down here for, that would be your first objective. Pocket down here for your next objectives. And this might end up being one of those moments yet again of a, you'll be glad you took something out when you did. And this is paper-wise, but if that's your entry there, return to fair value, it would be that imbalance is what you'd be looking for. That there's more like a gap there. And then run down, first portion right there. You take out 10%, 20%, whatever your overall objective is. Move your stop loss now to here. Now it's a zero stress trade. And you've walked away with 10% at least of your initial risk. So now when you look at that, you start to say, all right, this now becomes the order block that we want to key off of to continue on the downside. Now we've got triple lows here. Even though we did probably one pipette lower than that side. That is low 1825.00, and this is 1824.98. So this is 2 pipettes lower than that. So come back up into order block, breaker. Now that we've run the low, that becomes the breaker for the run up. Or these two would be the breaker if you add the two together for a 2 minute. See that? We just scaled out a portion right there at 2 pipettes below that thing there. So as soon as it hits it, we're out. 10%. You're moving to break even, which is right here. Just so we know, I want to see how much we get squeezed here, paper-wise. That's your entry point. %62% of our range is here. We're looking for our next objective down between here and here. Oh, on the S&P here. So if that takes that out, again, a great example of nibble a piece off, it comes back, takes you out, you took 10% of your initial investment. Now if that holds, that'll be awesome if that holds, all right on the body. We're sitting in the threshold of that, mean threshold of that up close candle. This is your breaker. Last up close candle before a run below an old low, and we just tipped below the low there, making this a breaker. Breakers tend to give us a lot of support. Good example right there. Bang, you're out. And you nibbled a piece off for yourself. Again, a little piece of cheese. Little piece of cheese, that's all we're looking for in these kind of choppy environments. You can still find a trade. You can still try to get yourself to zero stress as quick as you can, but you got to think about how much money you made there versus what you're risking. Now we're back into this range here. %. Pedia razor. Awesome things, man. When you see them, they react off these areas, even if it's for a short time. Tap it, react off of it, come back to another PD array, tap, tap, tap. It's always looking for these data points. How's our 500 doing? Well, it came down, worked it a bit more. That's a lot of chop. A lot of resistance to get down there. Give you 12 handles. Breaking structure to the upside, fair value gap, come down inside. Are we going to continue to push up now? Or are we going to run these lows? They shouldn't leave these lows untapped. So if we're expecting a low, small candle day, next day run back up into here. If we end up getting a small candle day in here, like a small little body, wicks stay where they are, then it runs back up tomorrow to hit that, then come down, I'm alright with that. It could even drive all the way up into the new week opening gap. It is the high, fill that, which is still inside the fair value gap on the daily. That would be a nice place to hit to reverse and come back down again, or just the edge. Shows more weakness if it just hits the edge here and peels away, obviously. Yeah, we have to chop around to try and get something. And a little big profit. Little tiny stuff here. So there's the 50%. So that would have taken us out here. We would have made a little 10% off of that. Pulling your fib tool here. What's it reaching back for? A PD rate, a premium. That was your 50. Now we're running for the lows. And I wonder if that's 50% of that range. If I pull that from there to there, or is it here? Because that's the gap. 50% of that range. The bodies respect the 50% of the range of that 50 of the fair value gap. So they hit in the first 25%, 50%. Now you're going to run these lows, or we're going to come down, tap them again, run back up into fill, and then run back down. Running this lows out 36, 37 handles. Ran through it. Here. Now you want to see that come back into it. We have if we want to see this break structure, come back into it. Breaker. That would be a breaker. Inside of fair value gap. If we have here, then you come back up into it, then it'd be a nice little rundown. I'll actually take this as a trade on the 1 minute, aiming for down here. If this breaks through with a nice bold candle, comes back into this area, stop loss would go up here. Or paper. I might actually take it. But it's not, so far I see what it's doing is it's equal to equal low. Now this ran all the way back up into here, creating these equal lows, then comes down and takes it out. Just for the sake of, it's not a great day to trade, I want a full fill of this. That would be a breakaway gap if it stayed open, because I'm kind of antsy and there's still this above. I'd have to put my stop loss right there, literally 10 handles above. If this doesn't get taken out, if it does, different story. You want a bold candle, come back to it, and then aim for lower objectives. If they hold this, this just means there's lots of liquidity building up here to go long. Now let's just do a paper trade. Don't push my luck, even though it's demo. I'm not anywhere near my live account today. This is more of a practicing my entries, looking for specific setups. This would be a bold candle down, return back into first, second, fair value gap. I like the second one, even if it's just the edge of it, and then come back down and fill this. That's what I want to see. So we'll kind of watch how this unfolds and see what we get. Look at all that equal low there. Now kick off that, go all the way back up again. Or give me a big bull candle down. Yeah, it's an observation sport today. Okay. And how many more seconds we got left in the minute? Oh, we still got half a minute to go yet. You don't want to just see a stop run here. So if they stop run that, I want a full fill of this. That was going to take that. You know, there's some, no. When I start to, you're going to get in your mindsets here. Here's where I'm just going to share with you my mindset going kind of, I'm waffling back and forth between different ideas here. We've just done a stop run on this. So now we can push up into here. But you could say, well, where are we in that range still? We're still in, that was 50% right there. So if we're in here, I'm in a discount. Now, if I'm smart money and I just run all these guys out down here, I want to push to a premium above price. So that would be either fill this or come back up into this right here, this breaker. Last up close candle before that run. So we could come back into this area here to offload, to run down again and take premium back down to discount in a bigger range. So if my mindset gets to, well, I could argue several sides of the market here now, then stay out. If you can say, yeah, it could go here, it could go here, it could go here, that would be a logical place to run to get a premium, to get a discount off again down here. That would make sense. And we'll see if that kind of manifests itself. Did you see how that kind of mindset, how you kind of get to that, when you're looking at PD arrays, you got to think about ranges. You got to think about this short little range that we've just made. Where are we coming back into that? Is there a PD array inside the premium of this little tiny range if we're going to extend it down? Or if we're going to blow it up, then I want to make sure that I get above this thing here, this higher fair value gap, this BISI. If I get on top of that and then get reaching for this, that's fine. This was just a quick stop run. Clean those guys out. Now pair them up with would-be buyers above here. And obviously this price imbalance further up. Or the opposite side of that defense would be order block. Come back up, find support here or here, halfway point. Inside these become inversion gaps, and then you push back down again for lower prices here. So if you can argue both sides, stay out. US CAD longs for the next leg up, and more US shorts, no Euro shorts. Hourly looks like shit. Are you in the 1 minute for Euro? Yeah, even 1 minute. You're waffling in here back and forth. You got this spot here, you got this spot down here. Where are you in that range? You're in the discount portion of that little chunk here, and you're in the midpoint of that huge range up there. Yeah, I don't see a lot in Euro. I don't know what time frame you're on in Euro, but CAD, do I even have CAD? No, I don't have CAD. Let me have a look at CAD. CAD. What are you looking for Euro? Just CAD longs for the next leg up. Well, here was your leg. From there to there, there to there. So that's your upside portion right there. So you're looking at about another 20 pips for the price leg up. Are you looking for a different price leg in terms of minute? Look at this. Huge breakout, return back down. Return back down, all the way back into perfect price rebalance. Price here. Hit the PD arrays. We've already done our work in here. We can start to pull away, come back inside order block. Threshold holds the body of the candles, breakout above. CAD target is 38.50. What have I got on mine here? 38. Oh, you got 38.50. Now on TradingView, they might be much different. I know they're different than what we have here on MT5, but I've got 37.44. What's happening up there at 38.50, you said? 38.05, 38.50. 38.50 is right. So you've got it sitting in here somewhere on that wick, or at this price imbalance, or this old high, halfway through that candle, don't forget. Rejection block. Weakness is 25%. This is an example of weakness. So you have a big wick up. This candle opens, only comes into 25% of that wick, shows some weakness, and starts to degrade. You're coming into this breaker right here. Yeah, I've just got it running up to here. You may be right, though. It may be going up a lot higher. But look at the midpoint of that candle first. So 37.60, 37.66, 37.67, something like that in there first. And then if we blow through that, look for that high, which is that price imbalance again. Then inside the imbalance, and then start looking for the rejection block and that higher up in that general area, 38.50. Yeah, you're up. What was the time frame you're looking at to call that? Because don't forget, you want to try and keep in your mindset around whatever array or whatever time frame you're in. Look at the next PD array inside that time frame. Because if that one up there, if you're aiming for 38.50, that may be days away yet. Or, you know, like you might actually get there if we have another long candle day like that. It's doable. It's definitely doable. Oh yeah, this reach here, see how it runs up into here, the top of that fair value gap, that BISI? That's where I've got my price leg running. I just saw it now over here. So what time frame are you in? Yeah, I was looking at the daily for CAD. Okay. Yeah, I like this upside objective here, like the midpoint there, and then that price imbalance up there again. Cleaning it out because those are all relative equal highs right there. So it'd be nice to get into the rejection block for sure. What's this guy doing? He's still coming down on us. Came back into that trade. One, that's the second one I like. I wasn't here to get this, but 4 minutes ago, 5 minutes ago, there's your entry right inside here. I wanted to fulfill though. Didn't get it. But you did get your entry 1, 2. I would have gone for the 3. Mind you, I was arguing both sides of it, wasn't I? Well, there's your argument for the downside. Still looking for these objectives down here. Break below it. Come back into it. It's sloppy price action, but it's definitely if you're supporting a downside, you got a run here. That was your stop would be here. Paper trade that one if it gets to there. Running out of objectives here. All right, it's 9:30. I think that's it for me. Playing around in here. We got a couple of little paper trades. Better to stay safe and sorry than sorry, right? Yeah, I stay out of the market. Keep an eye on your areas. Keep practicing your PD arrays. I'll give you an idea of how I like to practice my PD array stuff. Is you go to the top, this one here, you click one candle at a time, and then you start practicing. So you just kind of scroll all the way back through a whole bunch of different charts, and then you start. You'd have to get this thing out of the way, but you start kind of looking at that candle. You say, oh, it's come up to that array, where would I come to next? And then you start slowly clicking through it, and imagine if you're making your decision off of this and the next candle is about to open, where would I make my decision to go next? And you practice. This is the closest you'll get to live practice, but don't cheat and kind of look at where you're going through. Just kind of close your eyes, scroll all the way back as far as you can, and then just kind of start going through one candle at a time and saying, okay, it would go here next. Okay, it would go here next, and you slowly click through one at a time. That's how I spend a lot of hours when the market's slow, I will practice doing it that way, just over and over and over again, keeping my eye tuned into something. And if I go, oh, I missed that array, or I'm getting tired now, I'm missing arrays down in here, I'm not pulling my fib tool enough or whatever, you start to get lazy after you've done it a while. But that's a great way to practice, to kind of keep your skill set up. If you're just going to click through one candle at a time and say, where would it go? Now, why did it go to that one? And don't just write the candle off. Just say, what array did it run to? Where are we in a range? Are we in the premium? Are we in the discount? Did it tab an order block, high, middle, or low, or high threshold? Sorry, the high, the open, or the threshold if it's a down close candle. But anyway, that's how I like to practice. Kind of give you an idea of what I like to do to kind of keep your skills up. And it's a great way to practice. Great way to practice. And do that on all time frames. 1 minute all the way through to the daily. And you'll get better and better at reading price over time. And don't beat yourself up. Just say, okay, I know what PD array that was reaching for. Order block. Return to, break down below structure. Get inside right here. Short, aiming for here, that kind of stuff. So you just kind of practice where you would start to unload positions as well. Another way I like to do is kind of just put a bunch of different lines in there. So you're going to say that's going to be my entry, that's going to be my stop loss, that's going to be my first take profit. And as you start to click through your chart, you'll say, okay, that'll be my entry. And as you click through, you say, did I get my objective hit? Yes, I did. Right down in here. Perfect. Now I'm going to move my sticks to a different direction, and I'm going to say, that's going to be my next objective. Okay, I hit it right there. And then I'm going to aim for this objective right here if it hasn't already hit it. And right there. See what I'm saying? You just keep looking at each candle and just keep clicking forward and practicing that way. Anyway, that's how I practice. It doesn't have to be your way of practicing, but it's a way to train your eye to start more regularly. If you're not training live in the markets, I have to wait a whole minute for that candle to finish off. So unless you're trading on a seconds chart, practicing that way, this is a quick, easy way to do it. One click and that minute is done. You don't have to wait for it to come back and forth. You make your decision based on as the candle ends. You click and say, now I'm just pretending now that this candle is about to end and I'm about to make my decision. Where am I going to go next for the next candle? Anyway, that's how I practice it. I was thinking the same. I need to get to bed. Slow day. We'll try it tonight on Forex Replay. All right, my friend, you have a great day. Have a good sleep. Thanks for keeping everybody safe down there and taking care of all those people with poor choices, making poor choices. Yeah, that thing's working out nicely now. That was the next entry. Run down. Now we're hitting the objectives. Good. Now we're getting our objective. Anyway, it seems like every time we go to bed after 9, or you go to bed after 9:30, markets do a little run. See you tomorrow, buddy. Take care. I'm out of here. I'm Darren Hancock. Thanks for turning in today, guys. Those of you who did pop in, hope you got something out of it. If not, pop in again tomorrow. We'll see what we got for you. I provide live feeds every day, a little bit of ideas about some trade entries, free signals. I'm not looking to buy any. I'm not looking for you to buy anything, and I'm not looking to sell you anything. I'm just here to kind of share some stuff with you. And if you're here to learn and or here to utilize your skills and hopefully make a bit of cash along the way, if you're selling or trading live, then we're doing it all together. We're kind of all helping each other out. So wish you all the best. You guys take care. And remember, always pay it forward. Take care of your fellow man. Love each other out there. It's a tough world. Don't spread the hate. Spread the love. Have a good one, guys. Thanks.